Good afternoon. This is Tim with BIS Commodities with take a look at our week in review. The second week of September, the week of the 13th. Let's take a look where we close for the week. Start with corn. Dees corn up 13, just a hair, 368 and 3/4. And again, in the Dees contract, November beans, the winner up 41 cents this week, just shy $9, 8.96 and 3/4. Taking a look at the livestock markets, cattle closed up $3.20 in the October contract at 98.07. October hogs up just shy of $3 at 66.47. Looks like the dollar is going to change slightly weaker, down about 14 ticks or so, fairly steady in the week at 98.22. Looks like the stock market's going to close around 440 points higher, 27,250 area. Taking a look at corn for the week, obviously this week was all about the monthly supply and demand report, and when all eyes were kept on what were we going to look at all the numbers when they came out, there really wasn't any big surprises in this report. The carryout number for old crop corn was bumped a little, just at 2.45 billion. And export demand, no great surprises there. The production number was a little bit larger than what the trade was expecting. That yield estimate down a little over a bushel an acre, down to 68 and change. That gave us a 13.8 bushel corn crop. That was more than the trade had anticipated, a little over 200 million more bushels than what the trade was expecting. Again, the numbers were considered slightly bearish versus expectations, but that production number dropped a little bit. Probably the most surprising thing about the report was the reaction of it. We did see the computers trade this thing down to 353 and change. The old December low last week, 352. So we were able to hold the. And once we were didn't break the lows, we've seen some buying come into the place. So I think the big news item is one would have thought with the numbers given to us, we would have broke that 350 to the downside in the D. So coming into play like we have seen in the past. So the big sellers had their opportunity to sell it, and we didn't see that follow through. So I think that is positive upon that, and the fact that when you take a look at the charts, we actually had an outside week, meaning we made new lows this week and new highs compared to the previous week. That's positive on the charts. I think in order to cause a short covering from the funds which are holding a substantial short position in here, I'm looking at the 381 and the D. So I would suspect the close above that would maybe create some get me out of my shorts, and then you have to eyeball that carryout or that gap number from the previous report up there at 388 to 392. I think there'll be a lot of targets there as far as selling if we can get back to those areas. So when I take a look at corn from more of a fundamental approach, it is interesting that we are seeing continued strong basis in here in Cedar Rapids, as well as the entire cornback. Taking a look at basis versus a year ago, there's places in Indiana are 80 cents over this week compared to last year at this time. That's an 80 cent change when future prices are pretty close to the same price as last year. Here in town in Cedar Rapids, we're actually 54 cents over. Our basis is 54 cents better this week compared to last week at ADM. So we know the basis is strong due in a large part to farmer withholding old crop corn. Moving forward, it'll be interesting to see as we get closer to the harvest season if we're going to continue to see that strong basis, or farmers are going to hold if there's enough storage in the countryside. And I think that all is yet to be determined by the size of this crop, which in no certain terms has been decided yet. As we know, a third of the corn crop got planted the month of June, so there's still some uncertainty moving forward. Taking a look at what to look at upcoming this week as far as corn. One, obviously the weather. We're going to continue to keep an eye on that. The weather forecast can't get any better than what it is. Above normal temps extended into the 6 to 10, 8 to 14 day. We'll see what happens as we get to the end of the month into the month of October. As we're all aware, we're going to need a full growing season. Also, there's a lot of rhetoric this week with what the administration is going to do with the biofuels. If something was going, if we were going to see some reallocated gallons that from the RIN waivers, if we're going to see that pushed back onto the marketplace, or how the administration is going to handle that. We were hoping to get something out of the White House out this week. As of this time, we have not seen anything, so we'll keep an eye on that as well. Taking a look at the report, and obviously the political items that continue to go on, but let's take a look at the report. The report was probably viewed slightly bullish as to what the pre-trade estimates were. We did see a reduction in yield down the 47.9 bushels. That was off from the 48.5 last month. Trade was looking for probably closer to 47 bushels an acre, so a little bit larger yield than expected. Record pod weights, by the way, from the NASS reporting service, which is interesting that even though 6 million acres as of last weekend weren't putting pods on yet. So I'm not sure how that figured into the equation. I'm guessing it didn't. But taking a look at the soybean carryout, old crop beans, 1 billion bushels down from last month. We've seen an increase in, obviously, in the soybean crush. Exports continue to trug along a little bit better than they anticipated. So that was able to find some support in the marketplace. And then we've seen a little bit of an increase in demand on new crop as well. So our ending new crop carryout 640 million bushels. And again, that was a little bit less than the trade average, just slightly bullish to what the trade had expected. But the big bullish item or news item for the week was the continuing tariff talk, as prior to the report, we were up 15, 16 cents on ideas that China was going to start buying some soybeans from us and pork, or at least there was going to be an exemption of the oncoming tax that was supposed to start this month. And maybe there was some goodwill gestures on both ends on as far as trying to get something cooking prior to the talks that are scheduled to meet in the beginning of October. So upon that, we did see China come in and buy some soybeans from us. Now the question will come in weeks ahead is, what are we going to see? We're going to see some continued purchases. Most analysts think we could see anywhere between 2 and 5 million metric tons of Chinese buying. A lot of uncertainty still moving forward is if the tariff for certain buying entities altogether, or if it is just not pushing the upcoming tariff on to the marketplace. But needless to say, technically we're able to pop out here, make some new highs, get the November contract back over $9. We've been in a month and a half trading range. 855 has been the bottom end of the node. 890, 95 has been the top end. We traded above $9 today. Couldn't hold it, but technically it does look supportive. In weeks to come, we're going to keep an eye on. Next week, we're going to keep an eye on to see if there's some continuing buying from China as far as soybeans are concerned. And we'll continue to keep an eye on we're going to need a full growing season to finish the soybean crop as well. And as we move forward, most analysts believe that you're probably going to see somewhat of a reduction in yield, yet to be determined, for both corn and soybeans. taking a look at the livestock market, hogs is the benefit of the talks this week as well. A lot of interesting things going on there is cash was actually down $6.50 on the week from the national direct perspective. We've seen a cutout weaken as well. So we're seeing weakness on the cash side of the market. Futures are up $2.97, basically $3 in the October contract on the week. There was more limit moves this week than non-limit moves in the hog contract. So we've seen a lot of speculators coming in, driving futures higher, but the cash market continues to erode. So at some point, we're going to have to see some evidence of China coming in and buying pork. Obviously, exports are growing. They've been up. China has been buying. Japan has been in buying some pork as well. But at this point, we're not seeing it in the cutout and or the cash market. So next Monday, it'll be very interesting to see if the specs that came in here bought this market are going to get rewarded. Some business coming into play, and then we'll see it on the cutout side, which one would think would spill over into the cash market. So there are gaps up in this futures contract. October is still in the range. We did see December break out. I think we're going to have to need some confirmation on the cash market, or I think you could see some more weakness come back into this futures and this wild market. And here, cattle on the week. Cattle was also up on the week. Even though we've seen the boxes decline, the combined choice select was down $5 or so on the week, and that was following last week's lower price as well. And we're still maybe we're seeing a little bit of getting priced out of the market. We've seen the explosion higher in the boxes when we had the cattle, or we had the fire in the Kansas plant. Since then, peaking out those boxes higher, we've seen things fall off